Hello and welcome to Inderes TV. Valmet reported its Q2 result on Wednesday, and today I'm in the studio with analyst Antti Viljakainen to discuss the result. Hi Antti and welcome.
Hi Pia, thank you.
So what was Valmet's tops and flops during Q2?
If we start from the top side, new orders beat our estimate and the consensus estimates, and they also increased year on year after several quarters of decline. That was definitely positive. This was driven by higher orders in capital businesses, i.e. process technologies, which are a bit lower margin business than services and automation. Actually, services and automation didn't reach our expectations in orders. On the flop side, I forgot one thing to say on the top side. Market conditions are definitely improving. Valmet upgraded short-term market outlook for two of its businesses and decreased for one, and especially business environment in important service businesses is definitely improving as operating rates in pulp and paper industry are improving as well. But on the flop side, Q2 results were clearly below our expectations and also market expectations. It was a bit puzzling as the company made positive estimate revision for full year estimates, and they expect to improve results in this year, and after H1 they are some 9% behind of last year, so H2 must be record breaking to reach the guidance they have. All the tools to reach the guidance, but it must be really good half. And basically these two were the hottest topics on the report. In general, I would say that the report was relatively neutral and it didn't cause any major estimate revisions so far.
Right. So like you said, they adjusted their guidance, and now H1 was relatively far away from that, and then they have a lot of catching up. But as you said, you do believe it's possible that they catch up during H2?
Yes, I do. Definitely. H2 23 was relatively weak in important service business as operating rates in pulp and paper industry plummeted, and Valmet had low net sales in that period of time in service business. Service business will definitely improve a lot in H2 2024 and will drive the company to the guidance. But it will need support also from automation business, which is the second high margin business for Valmet. Valmet has also some inorganic growth supporting H2, and also order book is actually turning the net sales a bit faster than last year, so the company should grow in H2 even if backlog is down year on year relatively a lot. And I believe that these drivers are enough to drive Valmet to the guidance. It would be very unusual that a company like Valmet, which has been always conservative in its guidances, would make such a major mistake that they upgrade guidance during the summer and don't reach the figures. So it's not wise to expect that people are stupid if they don't get reason for that.
Yeah, so we can have some confidence in that then. So orders saw a slight increase after 4 quarters of decline. Does this bode well for the future, and do you expect this growth to continue?
Yes, I do, especially in service businesses, as market conditions in pulp and paper industry are slowly improving. Also, comparison figures in capital businesses, process technologies, are relatively low for H2 and also H1 25. So bottom should be in rolling orders somewhere here. I'm confident that also this inorganic acquisitions support growth in orders.
And as you mentioned, the order backlog was shorter than last year. What does this mean going forward, or in practice? What does this entail?
It means that net sales in H2 can be and will be higher than in H2 2023, but on the same time, visibility to next year is weaker now compared to what it was a year ago. So estimates made for the next year are more uncertain. But on the same time, backlog consists of more of service business now, which is high margin business. So actually, I guess that the margin in the backlog should be also higher. And in addition to that, Valmet has suffered a lot in project businesses, in projects that were sold before inflation started to increase, and these projects are now getting away from the backlog. So backlog quality should also increase in process technologies.
Okay, and well, we covered the outlook for H2 quite well already, but then looking a bit further into the future, what do you expect in the next few years from Valmet?
I believe that the company continues more or less the same path, continuously grow and improve, especially service business and automation, which are the profit generators for the company, and continuously improve all the businesses. They have also potential to make some acquisitions, especially in services and automation, but it might take some time, because last year Valmet made 2 relatively big acquisitions, and they need to digest the debt a bit. But sooner or later acquisitions will continue. New CEO will start in August, but I don't expect any major changes in strategy. Valmet's playbook has been working well during the last 10 years. The company has excellent market position and strong competitive advantages. So I believe that they continue more or less on the same path of profitable growth, and they have been traveling last 10 years.
So stable development going forward with some organic and inorganic growth.
Exactly. Valmet's market share is, especially in capital business, is relatively high, and the markets as such are not growing that much. So it's very difficult to see that the growth would boom suddenly. But they have definitely still room for growth in line with market or slightly faster, and also room to improve profitability and increase profits from that side as well.
Okay, perfect. So a stable company. Thank you, Antti.
Thank you.